Folks, we're going to talk about the biggest winners in the housing market that we are going through. And we'll probably also touch on the biggest losers in this market. But I think first we're going to talk about the biggest winners because I think they are clear as day. And we have the one and only and great Lance Lambert from Fortune here today. Lance, how you doing?
Yeah, doing great. And so Fortune Magazine this week, we unveiled our 69th Fortune 500 list ever. And we lost four real estate companies due to last year's mortgage rate shock. Compass is one, Zillow is one, although a part of their revenue decline is just they're not buying homes and selling them. And then the third, Rocket Mortgage, who, they've seen their revenues really boom bust for refi. Makes perfect sense. Who's refining an environment from 3 to 6? On the opposite end of the spectrum, the home builders on the list, there's 5 of them, like Plute Group, DR Horton, Lennar, DVR, they're all up. They all moved up on the Fortune 500 list.
Wow.
And what we're seeing is that, existing and resale inventory constrained, right? Constrained. There's not a lot of it. And not a lot of it is an understatement.
Yeah. Yeah.
And then the other thing is that during the pandemic, there was unlimited demand, essentially, right? Supply was very constrained. It wasn't in a great place. And then demand just ripped. And so builders had the power to pretty much charge whatever they wanted, right? And they could then do that throughout their whole supply chain too, pass on costs and charge. And then, why do they need to pay realtor commissions, real estate agent commissions? So got rid of that. All these things took builders' margins to levels that have never really been achieved historically, insane levels of margins. And so when the mortgage rate shock happened last year, what the builders were able to do is, depending on where they are, what community, what their type of buyer is, what the buyer's sensitivity is to the mortgage rate shock, and then depending on how many people were canceling, they could select different things to do for them to kind of bring them back into the market. Maybe their mortgage rate buy downs. So the Fed makes their rate environment, the builders made their own. Maybe it's some of the incentives, giving people cash at signing. And then some of the markets, of course, you have seen corrections last year, not this year, it was last year. They met the market coming into the spring, especially places like Austin. That's where you actually got the 10, 15, some of the 20% cuts, and some of the Western secondary markets. And so builders went out and met the market. And now there isn't supply, and they still have that wiggle room, although they're pulling back on some things. Some builders are doing fewer mortgage rate buy downs. So they met the market, and their sales are in a really good place. And unlike the existing market, which also saw a rebound in buyers this spring, they can only improve so much on the existing sales. And we saw that initially, that big tick up, but that was just eating up the excess inventory from last year. Now existing is constrained by this tight supply, and builders have room to run. And so Wall Street in the past 3 months has gotten pretty bullish on a lot of these builders. And so that I want to share a few things on my screen. I just reached out this week and to Deutsche Bank to get their report on builders, and then I did a chart on builder stocks.
Very cool. I think I gave you the ability to share, I think.
Awesome.
Yep.
Okay, so let's start with builder stocks. This is the shift in builder stocks since January 1st, 2020. And what we can see is that during, initially COVID hits, people were like, oh, wow, builders are in a bad spot, right?
Yep, I remember.
And boom, right off the bat, they were just back, even when unemployment was still at 10%. And by the time 2020, so right around here in November 2021 is when Fed Chair Jerome Powell comes out and says inflation isn't transitory, and that was the signal to the market that, oh, rate hikes are coming. The rate hikes actually came in February, and by that point, builder stocks were already down like you can see here at least 15-20%, it looks like, of the gains chopped off. And then as the summer gets rolling, builder stocks hit a bottom in June 2022. This is important. So right there is when the public is starting to get fearful, right? That's all right. The bottom's already in for builder stocks.
It's funny. I laugh because I remember there, I'm obviously on YouTube. People are watching this on YouTube. There were housing crash bros, as I call them, traveling the country in June and July of last year, saying that builders are going to go bankrupt and builders are going to do this and that. And it's already the bottom.
YouTubers started to travel like here, early this year, like end of last year into early this year. And so had they actually been traveling here, they could have like signaled to some people, hey, there's some correction in some of these markets. But literally by the time they were out there in these subdivisions and stuff, they had already bottomed.
Yeah, it's wild.
For the builders. And I'm talking actual prices now.
Yes, correct.
So builder stocks bottomed in June 2022. Builders met the market with all their affordability movements December, January coming into this year.
Yeah.
But that is so interesting, that how the cycles of fear play out, which is by the time the public's starting to get fearful, bottom's sometimes already in for things. And so
many times is already in. The public or the masses is often late.
And so now we're at the point of the cycle where at least on existing homes, we're going to start to see the year-over-year declines, right? And so now we'll start to get the year-over-year headlines down. I'm not going to write it because I focus on the month-over-month stuff. Right. But builders are at an all-time high for stocks.
Yeah, and it's really funny. I want to collect. I'm going to collect some receipts here because again, people can go back and watch the videos. I came out very early on and really at the peak here, which I think was July of 21 or whatever that peak is. I think Jerome Powell basically not only dumped the transitory word, but he also was saying things like housing is unbalanced and things of that nature. All of the idiots talk price. And I'm like, guys, he's not talking price. He's talking transactions. Hence, you've had Compass, Rocket Mortgage, these Zillows fall out of the Fortune 500. Why? Because they're transaction based. We went from 6.5 to 4 million transactions. I called it. It's here, not price. Now we're operating in a world where inventory is not coming back because of interest rate lock-in. Right? I was nice enough to be featured in a Fortune article talking about that. Accidental landlords and staying put. And you have a personal story, right? If you had to do it again, you would buy a bigger home because family's growing. This is real world stuff. But right now, builders are just flat out winning. Their input costs are collapsing. Lumber, copper, all of these input costs are collapsing. They're using technology. I'm shopping for new homes today, and they don't have agents at these. They have little codes to get you into these houses.
Now, their margins are still going to be good, right?
Of course.
But who's going to absorb the increase in home price? This Deutsche report says it's not builders. It's going to be landowners, which is interesting to kind of go how through. So what they said is that land owning is the play on home prices.
Okay, tell me more.
Let me pull up the report. Let's see. Let's see if we can find it.
Type in land, maybe. Yeah.
Where is it in here?
So this is basically new lot acquisitions. Is that what they're kind of we thinking? I'll just let you find it. No rush.
So this is a different one. Land prices rise with and typically faster than home prices as those appreciation.
That makes sense to me.
It doesn't have it here, but it says in there that the land leads prices and that essentially landowners who sell to builders absorb the gains of home prices.
Oh, I got it. I understand. Yeah. So that makes
So,
perfect sense to
so
me. Yeah.
home prices don't necessarily move the builders, is essentially what this is saying. But the land people now, and
Mm-hmm.
that's why it was important when Ali Wolf, like a few months back, was starting to say land prices were going up, because land prices lead home prices.
Exactly. That's an early indication. You're absolutely right.
Yeah.
And I love Ali Wolf stuff.
And that's
Yes.
why last May, April, June, we probably knew there was some correction coming in some of these markets because land value started to decline.
Well, you actually had builders in their quarterly reports talk about getting rid of options they had on land. I mean, that was a thing that was actually discussed. And yeah, if you're going to be watching builders, I think this is an excellent reminder. Watch land, watch lots, because it is a leading indicator for sure. So great find. Thank you.
Okay, so I'll find so our base case is continued normalization. We believe it is reasonable to assume that with builders having worked over the past several quarters to find the market with modest price decreases, incentives, and rate buydowns, the gross pace of sales should settle into typical target ranges, with the major cancellation event also behind the builders. That said, given community count depletion, a weaker overall demand environment, and elevated cancellation rates in the second half of 2022, I don't know what they're really going to there. I actually thought they were more bullish than that one. That's their base. Do they have a bull case? We have turned from being cautiously optimistic
to decisively bullish
on new residential construction. Yeah, and they upgraded IBP and BLD.
Yeah. The other thing I want to remind folks of, Lance, is you and I last week, it might have been the week before, talked about one of my fears of new construction for the private builders. This is obviously very much public builders, because public builders have access to capital streams that private builders don't. I think in 9 months, 12 months, private builders shrink, thus giving public builders even more lion's share of the market.
That makes sense. And so our view, Deutsche Bank says, is that home builder stocks can climb meaningfully higher. In the post-pandemic home building environment is not the post-apocalyptic wasteland that many were predicting last fall.
Oh, post-apocalyptic. There were plenty of people calling for that. And everybody knows who they are on social media. That's funny.
So we could go through the top calls, the top ratings for some of the home builder stocks.
Yeah, if you want to.
People might find this interesting from Deutsche Bank. Their number one, D.R. Horton, which if you could see here, D.R. Horton's actually been the best performing home builder stock of the major ones during the pandemic. It's up 116%. And they have a target price of 150. Let me see what D.R. Horton is today. 114. So 150 is actually a pretty high target price. The second one is, what is that? Meritage. And they have a target price 200. Let me see what their stock is today. 129. So they're pretty bullish here.
Yeah, they are.
Is that how you pronounce it?
Pulte.
Yeah, I knew I was saying it wrong. Yeah, I said that earlier. Pulte's, that's it. They have 95 on Pulte. Let me see where they are. 71, so that's still pretty big too. Do they have any more?
That's the big three.
Oh, they have I didn't look at their housing forecast. Do they have a home price forecast? Macroeconomic.
Oh, there we go. Oh, that's just sales. No, that's forecast sales. Okay.
I don't think we're going to get price from them, but let me see what they have on single family. So they have,
those are starts, then they have completions.
Yeah, and the parentheses are negative.
Yep.
So starts year over year pulls up in Q4, which to be up year over year, you have to have hit it a little before then.
Yeah, exactly.
That's why I'm never too crazy on year over years, because it's like, well, they miss when it actually happens, and you can easily misread it. Okay, so I don't know if there's anything else too interesting.
Yeah, there, and again, you have an article on Fortune people can go find that actually goes into the details of this report. Where can people find that?
It'll come out on Friday, June 9th on fortune.com, probably in the morning. You could Google Lance Lambert Fortune.
Yeah, and this will go live on Saturday. So, folks, the article is already written. I'm speaking into the future from the past and having fun with my friend Lance Lambert. Lance, thank you for all you do.
Yeah, this is great.
Thanks, bud.